Department of Biochemistry, Molecular Biology, and Biophysics. Uh, and as a kind of debrief of how we end up here is that I figure out that we really need this financial help. Like universities do not provide a lot of these financial education, and this was a good output to be able to put it all out for more people like me, that graduate students that start doing taxes when they join the grad school.
And hi, I'm Dr. Emily Roberts. My business is personal finance for PhDs. I'm really delighted to be back with you all because I love talking about taxes and answering questions about them. So basically, I have a PhD in biomedical engineering, which I earned about 10 years ago from Duke University. And while I was in graduate school, I was having my own difficulties in like understanding the forms that the university was sending me or not sending me, and how to interact with tax software. And I know in retrospect that I made some mistakes in like filing my tax return. But basically, when I finished grad school, I kind of realized that nobody was like teaching personal finance for my peer group of funded graduate students and postdocs. And so I decided to kind of step into that vacuum and start my business, personal finance for PhDs. And so I've been teaching. I'm a financial educator now, and I work a lot with universities. And one of the key areas that I get a lot of work through is taxes. So tax season is very busy for me teaching about how to properly like understand the numbers associated with your tax return, the forms, the lack of forms. I also talk a lot about estimated tax. If you want to ask questions about that, I love talking about estimated tax if it applies to you. Yeah, so I teach this, but I'm not a tax preparer, and I'm not a CPA, and I'm not a CFP. So, take this for what it is, like we said in the introduction. And actually, I have kind of a little giveaway or like bonus for you all. I'll put it in the chat. Every year, I create what I call a tax cheat sheet, not a tax cheat sheet, a tax cheat sheet. And it's just like a quick summary of like some of the really key important points about taxes for funded graduate students. So I just put it into the chat. Hopefully, you'll sign up for my mailing list, and then you'll get access to that PDF. And there's a couple of follow-up emails that like tell you even more information. So I hope you'll find that useful as like a follow-up resource.
Great. Thank you so much for those introductions. I'm sure you're going to get a lot of people on your newsletter because that is such an amazing document to share. And before we get into the questions that you all have sent in, I just wanted to tell everyone that's joined us, if you have any questions throughout our discussion, please just send it in the chat and then we will answer it as they come. Okay, so I'll make sure to reemphasize that later in our conversation as well. But our first question was generally, are there aspects of tax filing as a graduate student that are unique to this position that we should be aware of, in contrast to maybe some typical positions that we might have seen, like a W-2 role or something else?
Yeah, so one of the main things is that depending on which position are you as a grad student, right? Because you could be a grad research assistant, or you can be a graduate teaching assistant. The vast majority of the time, if you're a grad research assistant, potentially you're getting paid either by a fellowship or directly from your funding from your advisor or the university. A lot of the times, you don't get a W-2 when you're a graduate research assistant compared to when you're a graduate teaching assistant, that potentially you're getting paid by the university. And then you will get filed a W-2. Then because you're getting filed a W-2, they will withhold taxes on that. So it will be a distinction between what is your actual position, and in that position, if you're getting, what is your source of funding for that one.
Yeah, absolutely. Just to kind of like add on or like restate that a little bit, because you're exactly right. So vast majority of people in America are employees, right? And so they get a W-2, and it's like really straightforward to work with tax software because that's a very common situation. And so some grad students will receive a W-2, like Edgardo said, and some will not. And it's the will not situation that gets really confusing, because if you're on fellowship or training grant, oftentimes you're not an employee. And so there might be like a different kind of tax form that's being used to report your income, or maybe there's no tax form, and it's still potentially taxable income. So you still have to kind of work with it and report it on your tax return, but it's not as straightforward as that W-2 income. However, there are some benefits because there's 3 higher education tax benefits, but the main one that's used by funded graduate students is called tax-free scholarships and fellowships. And basically what it means is that if you receive scholarship, fellowship type income, but you have the term is qualified education expenses like tuition, that qualified education expense makes some of that scholarship, fellowship income tax-free. So most graduate students, not all, but most, kind of behind the scenes, like they're getting some money that pays their tuition, and then they have like that tuition charge, which is like a qualified education expense. And to some extent, they net out, they sort of cancel each other out and net out to being like no net taxable income, although that's not the case for every graduate student. So some people might have like a little bit of excess scholarship, fellowship type income over and above their qualified education expenses, or some people might have some excess qualified education expenses over and above their scholarship, fellowship type income. And then that gets a little bit more complicated on the tax return. So, but there are benefits to it because certain kinds of expenses are qualified education expenses that you might not expect and that are not accounted for on your Form 1098-T. So if you get a Form 1098-T, this is just like a word of warning. Don't think that you can just enter that form into tax software and call it a day, because by doing that, you might accidentally overpay your actual tax liability. Because there are certain qualified education expenses that are not included in box 1 of the Form 1098-T. So something that's tricky, I guess, particularly for graduate students, is that the Form 1090T kind of like looks like a really helpful official tax form, but it's not the whole story. It's not the whole picture. You have to make some adjustments from those numbers when working with like your tax software, for example. I think I'll leave it there just to underline though what Edgardo said, like if you're not having income tax withheld from your stipend or your salary, really important to know that and probably deal with it in the course of the calendar year, not just during tax time. We can talk more about that later, but just to reemphasize, it's really unusual to not have income tax withholding on your income, but it does happen to a lot of graduate students.
Great, thanks. And I know a couple of people have joined, so I'll just put the disclaimer in the chat for now. Moving on, let's just take a step back, and maybe someone is confused about how to file taxes. And do you have to do it on your own? Can you do it with someone helping you? What are some advantages that you guys have seen while doing your own personal taxes?
Yeah, so kind of to give you a little bit of background on why I end up where trying to do my taxes by myself, trying to understand a lot of how it works, is that when I started my PhD, so this first half year of taxable income, I was like, okay, I have no idea how this works. Let me go to a consultant, like an accountant, for no paid sponsorship, but I went to, for example, H&R Block. I went there. The person who was helping me had no experience working with grad students. So it was a challenge going back and forth with documentation. She was like, do you have this in documentation? It's like, no, as a grad student, I have nothing. That they gave me just the 10W8, 1098T, and it was kind of a back and forth. And also then I end up paying like a lot more because I was being helped by a consultant, like by an accountant. So then second year of grad school, now knowing like, okay, I will not go to an external source of help. I went to the university that at least in the University of Minnesota, we have a non-resident tax aid volunteering, and it's people who have more experience on these, that they're not filing your taxes for you. They're helping you to acquire the documentation, guide you through the process, and then you file your taxes by yourself with their help, usually beside you. And that was where I learned, okay, we need to learn more, because there's very niche situations for each person, and each condition is different for every person, like depending from where you come from, what are the type of funding. Also, like if you're doing like side hustles on the side, that's very important. And taking all those in consideration, for my third year, that is when I started doing my taxes by myself, the university provides, with that same program of volunteering, the TurboTax, the tax layer web software for free if you're a student of the university. So kind of combining what I have learned, the resources that I have found later, and the fact that we have these sources for free that also kind of help you guide you through which documentation do you need or have, then you get that. Also knowing that there are, depending on how much you earn, usually if you get less than, I think it's 60 something or 45,000, you can file, the IRS have websites that are to file the taxes for free because of your how much you're getting paid.
Yeah, I'll add to that. I had my own struggles and frustrations using tax software when I was in graduate school and ultimately kind of gave up on it and was like, I think I can just fill out these forms on my own. I don't necessarily recommend that for everybody, but I had a very simple financial situation when I was in graduate school, so it worked for me. Obviously, I have an interest in this area too. But some additional resources that you might find at your own universities would be what's called VITA. It's Volunteer Income Tax Assistance. So like the center that you mentioned, Edgardo might be a version of that. I'm not sure, but it's kind of like a nationwide thing. It's for like low income people, but graduate students are basically always are under their income qualifications. So that is a resource that's typically available to you. Like you said, though, you have to make sure that the person you're working with really has had some experience with other graduate students. If they're at a university site, it's more likely, but if they're at like a public library or something, they may be dealing with just everybody in the general population, so they might not have that experience. But hopefully you'll get, some insight from like, this panel and other resources you might seek out, so you can kind of maybe go back and forth a little bit if there's a person helping you and give them some insight, and then maybe that'll ring a bell for them. I will say, if you're going to use tax software not like provided by your university or anything, if you're going out on your own, either through the free file system at the IRS or just completely independently, what I have heard from graduate students, especially on fellowship, is that Free Tax USA is much more intuitive for them to properly like communicate about their fellowship and about their qualified education expenses and so forth. So that's one that I would say, again, it's just from people, what I've heard from people who've used it, over like TurboTax or some of the more popular like packages. It's a little bit easier. Now, if you're on completely on like W-2 type income, it may not be any better for you than TurboTax or something or some more popular package, but it may be worth checking out if this is something you've like struggled with in the past.
Great, thank you. We received a question in the chat, and I just wanted to share. How about when you get a fellowship award in a conference and you receive another document, a 1099 miscellaneous, or I think it's also 1099K, I think. So how is this file, how do you file this for taxes on top of that? Or if you either you have experience with that, can share.
Yeah, I have not had experience on any external from the university. I had situations where I got like awards, or like, for example, I got a teaching award last year, and because it was through the university, they just put it in as my stipend. Some awards, uh, if you kind of look at your 1098T, that amount that you got as an award, if it's from the same institution, it will go through there and you will be able to see it. I spent some time trying to figure out what those numbers mean. And when you do the subtraction and then see your account and do the sum, like sum everything that you got from the university, those two numbers match. It's not that all that is taxable because it will depend on deductibles and blah, blah, blah. But if you're receiving a document, that's a plus. On that end, a lot of the kind of like guided softwares will ask you like which forms do you have, and it will kind of prompt to kind of add the information that you have in that form and kind of guide it through that. But I think it will depend, like, on, in that case, in the miscellaneous, or for example other source that sometimes people get a document is the interest, when you have like a discover account that give a lot of interest, and then you get like that email of, hey, you got my more than $100 on interest, you need to file taxes on this. But at least when you have those kind of documents, it makes the process so much easier because you have the document.
I can speak to this actually because my university used the Form 1099 miscellaneous to report our stipend, like our fellowship type stipend income, which is a very off-label use of the form. I would not encourage this ever. It is nice, as you just said, to receive a form, but it can end up confusing tax software. So based on this questioner's exact like wording and stuff, I would interpret that that income is scholarship fellowship type income. And so I would report it as such, like through tax software or whatever preparation process you're using. Um, if you tell your tax software that you have a Form 1099 miscellaneous, it's going to be like, well, what is this? And it might have trouble actually figuring out that it is scholarship fellowship type income because it is an unusual form for that. So again, maybe Free Tax USA will have an easier time. But I would say that you might maybe ignore the precise fact that you received a Form 1099 miscellaneous and just go with telling your software that you received scholarship fellowship type income of whatever amount it was, because it might. The thing that you want to avoid is this income being misinterpreted as self-employment income, or even being reported as other income. Because there is like kind of a line on your tax return for like other income, and Form 1099 miscellaneous income could end up there. But you really want it reported as scholarship fellowship income if that's what it is, because like I mentioned earlier, if you have some qualified education expenses that you haven't yet used to make other scholarship fellowship type income tax free, you could use it perhaps to make this bucket of scholarship fellowship type income tax free. Maybe. So that's not going to happen if you report it as other income. So that's the reason for kind of keeping things like in the right category and like organized.
Okay, great. I hope that we answered your question, Maria. And we were talking a lot about tax credits and deductions earlier. So I wanted to ask, could we break down what is a tax credit deduction? And more specifically, are there any that we can take advantage of or qualify as students or graduate students?
I will say I took the kind of the easiest route of not trying to do itemized deduction because I was like, then you have to have record of everything that you have been purchasing and then trying to figure out if those are uh valid or kind of they actually count as the for in this case scholar uh tuition, these things that actually deduct from your uh final taxable income. So the way that I kind of seen that it's kind of like the allow the government to kind of choose how much you want to get deducted. It's using the standard deduction that depends per year, and that will do a call like I think this year is like 14,600. That then depending on how much you got, it drops that amount, and then everything else will get taxable if you don't have additional deductibles or additional like for example if you live in a state that have state taxes, Minnesota have state taxes, and if your apartment is and you're renting and your apartment tax is not tax exempt, you will get some deductibles there because then the building is also using them. Some of your rent have taxes on it, and then you will get some deductibles because you were paying rent. But mainly, I think kind of the bare minimum effort, it's kind of like the standard deduction.
Yeah, I'll kind of add to that, but also let me take it like back up a level. So you have your gross income, your potentially taxable income. And then the IRS, we'll just stick with the federal level for the moment. The IRS does allow you to take deductions in a couple of phases. And what deductions do is they reduce the amount of your taxable income. So ultimately, later, when your actual income tax liability is calculated, it'll be smaller because your taxable income is smaller. This is as opposed to a credit. A credit directly reduces your tax liability. So it's like it doesn't reduce your taxable income, but the resultant tax from that, it gets reduced by a credit. So The IRS allows you to take deductions in a couple of different phases. So one phase is taking the standard deduction or itemizing your deductions. I don't think I've met a grad student yet who is itemizing deductions post 2017 Tax Cuts and Jobs Act when the standard deduction was vastly increased. So I would say if you're like a homeowner and you're in a state where you pay a lot of income and or property taxes, maybe you give a lot of money away, very high medical expenses, those would be reasons why you might itemize. But again, vast majority of households, especially lower income households like graduate students, do not itemize. So if you're just taking the standard deduction, you're in good company. There are other deductions you can take outside of the standard deduction, things like student loan interest, for example. If that applies to you, you could take that in addition to your standard deduction. But as far as the higher education tax benefits go, there are two credits available to you. The lifetime learning credit is available, I would say, to all graduate students as long as you're under the income limits. The American Opportunity Tax Credit is only available to a small slice of graduate students. You had to have graduated college in that year, like 2024, for example. So only a few graduate students that would apply to, maybe. There's some other qualifications as well. And then the benefit that I mentioned earlier, tax-free scholarships and fellowships, where you use qualified education expenses to make scholarship and fellowship income tax-free, it operates like a deduction, but it's not like sort of technically referred to as a deduction, but it operates in the same way in that you get to reduce your taxable income using these qualified education expenses. So most funded graduate students, I would say, will use tax-free scholarships and fellowships to a degree. Whether they also take the lifetime learning credit or the American Opportunity Tax Credit, that's very individual. It could happen. So I think I'll stop there.
Great, thank you for sharing. I'll just throw again to everyone join. If you have any questions, please enter it in the chat. And another question that we received too in the pre-panel survey was about conference funding and how that can affect what your income is. And if either of you have experience with that, would you share?
Yeah, good example. I'm at a conference right now. So one of the things that is important is how are you kind of like if you're receiving money from the university or your advisor or like what is the source of funding will kind of depend. Like in my experience, usually you can get either a travel fellowship to then you kind of like potentially use some money and then you get the reimbursement. In that case, what I have seen is like you never used that money. That was one of the things that I have seen. Also, other format is like in our university we can get travel cards and everything goes directly through the university. So it's like you never touch that money because you were just the mediator of paying for that conference. And then the university do all the reimbursement directly to the card or directly to you, depending if it was out of pocket, like per diems, travel, and registration of the conference. Um, but it would depend on how do you paid for it, or if it was that you received the money and then use it, or if you use the money and then receive a reimbursement. That will be two different cases. That I'm not be super sure how those two will differentiate in terms of paying taxes of that money as it was like a reimbursement, versus you getting an award, getting the money, and then using that money for you to go to a conference.
I have a little bit of a different perspective on this, but it's a very tricky question and it's very individual. So and I have a lot of sympathy for graduate students in this situation because it can be very hard to interpret what is supposed to be happening. I'll say from my perspective, as an employee, maybe on your advisor's research grants or whatever, it is possible that you could have expenses paid on your behalf by your employer and there not be any tax implication for you. However, in other scenarios where like you might receive a travel award or a travel grant, scholarship, if it's in that category of scholarship, fellowship type income, then I think that you have to include it in your potentially taxable scholarship, fellowship type income for the year, just like you would your stipend if it was a fellowship stipend. Unfortunately, I gave you the example of tuition earlier, as like tuition is a qualified education expense. So if you receive like a scholarship that pays your tuition is exactly equal to the amount of tuition paid on your behalf, they'll cancel each other out. So like you won't have any taxable income from that tuition scholarship. But travel expenses are not qualified education expenses under tax-free scholarships and fellowships. So if you receive a scholarship fellowship type bit of income and you use it towards travel expenses, that is going to be part of your taxable income because you can't offset it against those particular types of expenses. It's in the definition of what is a qualified education expense. So what's tricky is not what you spent it on. It's like, what was the source of the income? So that's what you really have to figure out when you're figuring out whether there's a tax implication to you or not. What is the source of that income? Like I said, as an employee, I can definitely see a scenario where it's an employee type benefit. That's not to say that as an employee, you couldn't also receive a scholarship or fellowship. You could. So do with that what you will. It's very tricky.
Definitely. Taxes are no joke. And one question is, it sometimes can feel like this whole process is overwhelming and you can get lost, especially when you're first starting out. So, and this also is my next question that we received in the pre-panel survey, which is, are there forms that we need to fill out specifically towards graduate students, and what's a good place to start?
Okay. This will be kind of random, but can you repeat the question? Kind of
No,
zoned out for
definitely.
a second.
No worries, no worries. I was just about how this can be such an overwhelming process, and especially when it's your first year, you don't necessarily know where to start. And are there forms that we need to fill out as graduate students that are specific to our role?
Yeah, so the where to start, it's kind of like the best place to be. It's like we need to start on somewhere. And one of the things I would say and really, really appreciate like the resources that Emily Roberts has on her website, and that tax cheat sheet works amazing. Because it's not like it's every single possibility of tax document that you could get as a grad student, either if you're resident, if you're non-resident, like that documentation is there, and that's amazing. I would say one of the usual things for residents, it's either you receive the W-2 or not, either you receive the 1098 T or not, and then if those two that are like the most common, I think, are not around, is like what type of information that they are providing. If they do not providing any of those, your best friend will be the whichever website your university have that says how much you're getting paid. So every statement that you have, and then compare that to how much the university paid for tuition versus how much you actually got paid, and compare those values, and that will be your safest. It's like how much money do you got into your account every month throughout that year, and that's kind of like a place to start if you're not receiving any single document.
Actually, I have a clarifying question. I've I've been assuming that our audience here is all U.S. citizens, permanent residents, residents for tax purposes. Do we have non-residents potentially in the audience as well? Yes.
Yes, the
Okay,
chat is saying
great.
yes.
Because there's different answers, right? So everything I've said so far has been about like citizens and residents and so forth. Mostly it's been fine for non-residents, but the key difference is that for fellowship income for non-residents, it'll be reported on Form 1042-S with income code 16. And then you have to figure out from that point if there is a tax treaty that applies. Anyway, your software can do this for you. Sprint Tax is the most popular one for non-residents. But to go back to what forms should you be interacting with? On the citizen resident side, it'll be Form 1040. That's their the basic 2-page form that every tax filer is filing. Those basic 2 pages, plus there may be some additional forms depending on what exactly else is going on in your financial life. So if you had taxable scholarship and fellowship income, then you'll be using a Form 1040 Schedule 1, and that income is going to show up on line 8R. Form 1040 Schedule 1, line 8R for your taxable fellowship and scholarship income. And the weird thing is, for citizens and residents, you get to do this calculation. The IRS is not walking you through applying your qualified education expenses and all that stuff. You have to do the calculation on your own, or your software will do it for you. And just the net result gets into Form 1040 Schedule 1, line 8R. Another form that might be generated is Form 8863 if you're taking the Lifetime Learning Credit or the American Opportunity Tax Credit. On the non-resident side, it'll be Form 1040 NR, and perhaps also that Form 1040 Schedule 1, if you have taxable scholarship and fellowship income, that could apply to you as well. Those tax credits are not going to apply to you if you're a non-resident, so you won't get a Form 8863, or one won't be generated for you. But you will file a Schedule OI and a schedule or a form. I'm not going to remember the numbers right now. Sorry, the Schedule OI is regarding a tax treaty that may apply to you. And then the other form, which the number is escaping me, I'm sorry, is about your status as a non-resident, like it's sort of substantiating your substantial presence test to make sure that you're a non-resident for 2024, for example. So those are the forms that are going to be generated for you. And I would say the key thing on like the citizen resident side is just to make sure that that taxable fellowship income ended up on Form 1040 Schedule 1, line 8R, because if it ends up anywhere else, your tax return could get a little confused and it could mean that you're overpaying your tax liability or underpaying your tax liability, or, that would be the key thing to check in that situation.
Thank you. Another question received in the chat was mainly about online tax services to use. Natalia says that she only has a 1098-T reporting all of her stipend this year, no W-2, but she started with TurboTax but has found it very confusing. Are there others that you'd like?
I would, because this will be my second year using the tax layer that is provided by the University of Minnesota allow it to use it for free. You just have to say that you're from the University of Minnesota and they give you like the pass. It's kind of intuitive. There's sometimes that depending if you're trying to find some forms, they're pretty hidden. Like for example, if you're receiving a 1098-T, usually for in tax layer, you have to go to income, other income, and then in other income, there's like you keep looking, and there's one that is like grants, scholarships, and fellowships or some. I know two of those words are around in that, and there it's where you put that amount. So it's that one. There's the ones that are like free through the IRS, depending on your amount of income. Emily was mentioning the free tax one that it seems that to be more intuitive for grad students too.
Yeah, I'll just repeat myself. Free Tax USA for citizens, residents, and then Sprint Tax for non-residents, especially for Natalia's situation. Sounds like she's a citizen resident, so I would say Free Tax USA will be more intuitive for that fellowship type income. And also, I don't know offhand if Free Tax USA is available through the free file system that the IRS offers, but it's pretty inexpensive, even if it's not. So it's like a free federal return and then $15 for a state return. So overall, not too bad. The difficult thing about the free file system, I mean, I'm glad it exists, but oftentimes if you go through that first If you end up with any of these miscommunications that we've been talking about, the software might end up like kicking you up to like a higher level where you have to pay anyway if it thinks that you have some complicated aspect of your tax return, which you may or may not as a graduate student. So you have to still be sure you know what the bill is going to be at the end of the day, even though you went through the free file system.
Great, thank you. And the chat is open for questions, but if you wanted to be discreet, you can always direct message to the GSEC account and I can read your question for you. Another question we received was about joint filing. If we have a partner that we file with, will having one of us be graduate students affect the process in terms of filing together?
Well, I will say that I don't know. Not very like I haven't the opportunity to either met people who have done it this way or myself having that experience. So I will lead the open the door for Emily Roberts.
Yeah, that's fine. I would say if your spouse married filing jointly is not a grad student, they have like normal W-2 type income or whatever, it's not going to be any more difficult. Like it's not any special kind of thing. It's just you're a grad student, you have grad student type income, your spouse has W-2 income. It's it's something the software will be able to handle very well. What becomes a little bit tricky is if you both have fellowship income, for example. Um, just because, and I'm trying to remember, I don't think this applies at the grad student level. I think it's more of a concern at the postdoc level. You may be ineligible for certain benefits that would have applied had you had like W-2 type income. So the earned income tax credit is one that if you have only fellowship income, like for you and your spouse, for the entire year, then you wouldn't be eligible for the earned income tax credit if you were even eligible based on your incomes, which you might be if you have children, especially multiple children. Um, and then if you were both postdocs and both on fellowship, then you wouldn't be able to take the child and dependent tax credit, care tax credit, the one for childcare. So anyway, hopefully no one's in that situation, but that's the only like little wrinkle. Just generally speaking, having married filing jointly is not any special kind of thing. In fact, there is a little bit of a benefit because we were mentioning estimated tax earlier. So if you're on fellowship and you're not having income tax withheld, which would be the case if you're typically for U.S. citizens and permanent residents and residents for tax purposes, non-residents will have income tax withheld from their paychecks, even if they're on fellowship. So in that first scenario, if you're not having income tax withheld from your paychecks, you can have your spouse increase their tax withholding on their paychecks if they have like normal W-2 type income. And then you can avoid the whole estimated tax scenario. You don't have to pay manually. You can just rely on your spouse's like extra withholding to cover your income for the household as well.
Okay. And then I received another question about if scholarships or awards are taxable income. And I just wanted if you guys could just answer that.
If there's a difference between
Just if it's scholarships that people can receive, is that taxable income that they need to report?
yeah, like at least awards, like for example, a teaching award, or you go like you apply to something and they gave you extra money, it's extra money unless it's not until it's not like a directed like something deductible, a any award will be taxable.
Yeah, and the way I approach this, because I do speak to graduate students all over the US and everyone has different situations, is I just phrase it as you have to add up all of your what I call awarded income. This is scholarships, fellowships, fellowship grants, like certain types of grants, travel awards, poster awards, like anything that is scholarship, fellowship type income. Just add it all up together. It's going to be a scary big number because it includes the money that goes towards paying your tuition, blah, 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 behind the scenes. Then you add up all of your qualified education expenses. And you have to look up what that definition is because I'm not giving it in full right now, but things like tuition, required fees, your health insurance premium, if it's through student health insurance, things like that. and you just subtract one from the other. You just subtract all those qualified education expenses under tax-free scholarships and fellowships, that particular definition of qualified education expenses, from all of your awarded income, and you're going to come out with your taxable awarded income. So the answer directly is potentially, yes, potentially any scholarship awards are taxable. It just depends on whether you have a qualified education expense to offset them against. If you don't, then they're part of your taxable income.
Okay, great. And another question we got in the chat from Sky, when are we supposed to start filing? It's due in April, so when is a good time to start? And when is it really due?
Uh, I I think in terms of when it's due, I think it's April 1st, if I'm not
15th.
mistaken. 15th. Uh, yeah. Uh, I will say like if you have too many kind of confusing inputs of filing, like different type of documents, or I recommend to do it before, like with some time. It's like applying to a fellowship. Do all your paperwork, double check your paperwork, and then submit it. Like for example, I started uh, just inputting all my information to the software. I think when it opened, it was like the first week of February because I'm still waiting for other documentation to arrive. So it's like if you can just do it in batches of like doing it one by one based as everything has coming, or because if you have stuff that is arriving too close to the deadline and then kind of you freak out on how to do the things, then you cannot seek help on time on how to do it. So like 2 weeks seems reasonable, but I will say you can start earlier if you have all the documentation ready.
For some people, this is going to end up being an easy process. So, like, you might start it really early and then be like, whatever, I was done in like an hour, no big deal. Like, why didn't I wait till April 14th? Other people might wait that late and then realize there's a mistake on one of their documents and they have to try to get it corrected. And definitely, as you're receiving documents or not receiving them, like, just check them to make sure that they're right as they're coming in. Because if you do need to get something corrected, that's going to take some time. A lot of people do their taxes day of. So I don't want to say that's like impossible. It might be a bit stressful. But yeah, give yourself a bit of time. If all the documents you've received are correct and you like to procrastinate, then maybe leave it till April. I do that. Like I don't file my own taxes until really close before the deadline. Yeah, that's how my life works. But earlier is also good. So if you're expecting to receive a refund, which you might if you're on W-2 type income, or you've been paying estimated tax on your fellowship, or you're a non-resident, all of those scenarios, you maybe do a refund. A lot of people like to file earlier because they want access to that refund earlier. And certainly the earlier you file, the earlier you'll be in that queue to get your refund. So that's a reason to do it earlier. Yeah, it's very individual. Don't leave it to the last minute, I would say.
And then we received another question that's really interesting because a lot of grad students do move states for schools, so they can have some overlap. So Yuritsa was asking, how will this add complexity to my taxes if she moves states within the tax year to another state? How should she anticipate this changing her filing taxes process? And does it make a difference if she's an official resident, if you have that information?
Yeah, one of the things is that if you're moving states, one of the things like let's go from like starting, you start on the federal filing. Like all the documentation will go kind of to the same bucket. So it doesn't matter in which state you are, the first half of your filing will be exactly the same. Just put all the income into the same bucket and file. Uh, However, if you move states, it will be depending on if you move from states from a state that have state taxes to a state that doesn't, or state that have with the state that have, and vice versa. So then there's different tax responsibilities or tax index, to put it in one word, depending on the state. For example, California have like a 6 point something, uh, m- uh, Minnesota have like a 5.35, stuff like that. Then you're filing the tax, the state tax. Those will be different because it's per state. Uh, and that will be kind of like the main difference from if you moved or not. It's just the state tax, the one that would change the most.
Yeah, concur. At the federal level, it's all going into one pot. But Yuritsa, it sounds like you know that you became a resident of the new state, or maybe you're not sure. The cleanest scenario is when you are like a part-year resident of each state that you lived in, because that means that you will file two state tax returns. Well, I'm making some assumptions. If both states have income tax, you'll file two state tax returns, but you'll be a part-year resident probably in both of those. What gets a little bit more difficult is when you are trying to not be a resident of the state that you actually live and work in. And this gets more complicated and it depends a lot on the exact states involved. So I would say if you're not accepting of the scenario that you have become a resident of the state that you have moved to, you need to look up the definitions in for each state in question. What is their definition of a resident, a part-year resident, and a non-resident? See where you fit in, which of those applies to you, and then figure out how they tax each of those different scenarios. So, as a default, what most states do is that they are going to tax income that is paid in this like in that state, like the state where your university is. That state has an interest in you paying state income tax in that state, whether you're a resident, non-resident, part-year resident, you live across a state border, they have an interest in you paying income tax in that state. Now, I just mentioned living over a border. If you commute across a state border, that's a whole other thing. And you have to look if there's a reciprocal tax agreement between those two states, which there may be, in which case you would be paying tax in the state where you live, not the state where you work. So I say all this to say a lot of graduate students feel like the scenario is analogous to when they were in undergrad. Maybe if you went to a different state, than where your parents lived or whatever for undergrad, pretty much always like that student is still going to be considered a resident of like where they used to live, where their parents live, where they keep going back to, for every break. That's a pretty well established scenario, but I would say it's very different at the grad student level because I would argue that you make a permanent move to that new state when you go there for graduate school. It's not an 8 months out of the year situation. This is like a year round, multiple years in a row. You have a residence there. Like it's to me pretty clear you've become a resident of that new state. There's some ways you can argue, or there's gray areas around the edges of that, but I would say that's the scenario that applies to the majority of graduate students. So I think it's cleanest, as I said, in the year that you move, if you just decide that you're a part-year resident of those two states, and then you're just going to be a full year resident of the state where your university is, going forward after that year. So there may be 1 year when you file two returns in that scenario, or if you are trying to be a resident of some other state where you don't live or work, then you're going to keep filing two returns for as long as you're trying to maintain that situation. Again, I don't really think it makes a lot of sense, but some people have reasons for it. So I don't want to say it's the right thing for everybody. Yeah. So in the year that you move, you might do two. After that, maybe keep it simple and just be a resident of the state where you are enrolled.
Some more questions I'm getting are about this fellowship and like how to understand what are qualified education expenses is, or where to find more information about how to determine what that it looks like. And also going to send the disclaimer again, just so everyone knows that this is not any professional advice for any individual specifically.
Yeah, there are, and again, shouting again to Emily Roberts. She have displayed, I don't have exactly where is it in the website, the documentation that's have that, because you can find all those individual definitions of what actually applies for student like student expense deductible or not, and there's very niche definitions. So you have to be very careful to what do you define. So like if you ate at the university cafeteria, that's not student wise, but like tuition, some books, depending on the, like if you needed to buy a computer for the classes, it depends also on what was the use of that computer, or there's multiple definitions that you have to follow to be able to itemize that like deductible of the student purchase, to keep forgetting the word, but the student expense.
Well, since you were so kind to cite my website, I will put the link in the chat because I just found it. The key thing though, don't trust my website. Like go to the IRS website, which I have linked from that page that I just put in the chat. So the tricky thing is that all the different higher education tax benefits have different definitions of a qualified education expense, which is why I've been avoiding being very specific verbally because it is hard to communicate this. What exactly is a qualified education expense? So you can go to that particular page on my website. I have copied the definitions out of IRS Publication 970. You can go to IRS Publication 970, read it for yourself. But yeah, I would say the exercise that I recommend is thinking very expansively about what are all the education expenses that you've incurred in the course of 2024, and then going to the definitions and seeing which of those are qualified. Because you may surprise yourself that more are qualified than you think, or they're different than what you thought. So, Edgardo, you just mentioned like a computer. So, under the tax-free scholarships and fellowships benefit, a personal computer could be a qualified education expense if it is required of everybody in your course, your program, your school, your university, at some level, some group of students that you are a part of, it has to be required of them to have a personal computer. And this is not super common, but it does come up, especially, starting in 2020, 2021, a lot of universities were more forward about stating explicitly that a personal computer was required. It's died down a little bit in the past couple of years. So so go to the definition, see what is a qualified education expense that, under whichever benefit you're trying to take, and see if your education expenses qualify or not. The big one really to watch out for is your student health insurance premium. So if you are enrolled in student health insurance and health insurance is required of everyone, which it is at every U.S. university requires that their students have health insurance. So, and if you're on the student health insurance, then you can interpret that health insurance premium that is paid on your behalf likely to be a qualified education expense under tax-free scholarships and fellowships. So if you have some income that goes, let's say it's exactly equal, that goes towards paying that health insurance premium, it goes through your student account, you can see they exactly equal one another, then your student health insurance premium can make that income, that awarded income, scholarship, fellowship type income that paid it, can make it tax-free. But if you look just at your 1098T and you're on student health insurance, you're going to see that the income is in box 5, but the expense, the premium, is not in box 1. And that's because health insurance, the premium, is not considered a qualified education expense under some of the other benefits, not tax-free scholarships, fellowships, but some of the other benefits. And the purpose of Form 1098T is really to help you take the lifetime learning credit or the American Opportunity Tax Credit. It's not really for helping you calculate your taxable awarded income. So, as I said at the top, the 1090T is not the full story. It's not the end of the line on what is your taxable awarded income or not. You probably, if you're on health insurance or you have other qualified education expenses that are not reflected on the Form 1019 Box 1, you're going to have to supplement that information when you work with your software or your tax preparer and tell them, oh, I had additional qualified education expenses under tax-free scholarships and fellowships. My student health insurance premium, my personal computer, it was required, or whatever else, books, like whatever else comes up for you that fits that definition. You're going to have to do some additional communication, but it's worth it because every qualified education expense that you can identify, if you have awarded income that's taxable, you can make some of it not taxable. You can bring down your tax liability with every one of these that you can identify. So I think it's really worth doing the legwork.
Great. I think we have time for one more question, if that's all right with our panel. And I think this is a good place to keep asking questions where it's like, if I didn't claim or subtract my qualified educational expenses on last year's tax return, what could happen? And then further, which is a good question to ask, can I contact the IRS to fix this or make changes or amend my return? Even last year, or if you make a mistake this year, what's that process look like?
The I know that it can be done. I have never done it. Uh, but yes, there's means to communicate directly to kind of amend previous. And also, if you already filed the one from this year and submitted, there are ways to amend this one. It will just take time to kind of get those amends and then kind of get any return that it's derived from those amends because of how long it will take to then audit your whole filing. But yes, it can be done.
Yeah, concur. It's just called filing an amended return, and you can do so for 3 years. So up to 3 years in the past, you can still amend those returns. I would obviously, if you have identified qualified education expenses from previous years that you weren't taking into account when making your fellowship and scholarship income tax free, then it's to your benefit to file an amended return and maybe get a bit of a refund. But I will also say, if you've discovered any kind of mistake, I encourage you to amend the return, even if it's not in your favor. And it's less pleasant to spend the extra time to do so, but it is the right thing to do. If you found, oh, I had some additional income that I accidentally didn't report, then yeah, you need to amend for that too, even though it's less exciting. Either way, yes, try to be as accurate as possible with these tax returns. And if you make a mistake, it's okay. A lot of people make mistakes. That's why the amendment process is there.
Great. Thank you so much. We're just at time now. So I just want to say thank you so much for both of you for joining today and answering all of the questions that we had about taxes. Your insight was great. I even learned so much myself by listening in. But yes, thank you everyone. Also our GSEC participants for coming to our session and our Grad School 101. Please come to next one session as well. And yeah, I think that's all I have right now. If there's any questions, please feel free to reach out to me and I can facilitate discussion that way too. All right, well, everyone have a great rest of your Thursday. Thank you so much again, and goodbye. Awesome. Yay. And I'll stop recording.